So BearingPoint is an independent firm owned and operated by its partners. About 140 partners, 3,500 employees working across 40 countries globally. So the survey was completed with the Bavarian Finance Centre in partnership with some of my colleagues in our German practice. And it was across 48 banks. Now, whilst those banks are domiciled principally in mainland Europe, it does have far-reaching implications for non-banks and banks in other parts of the world. So it could just as easily apply to insurance companies, consumer finance companies, and my experience would suggest that the findings would be applicable to something much broader than financial services. That expertise probably won't exist inside organisations. So they're not going to have all the answers, they haven't got the silver bullet. So they are going to need to look to partner. They're going to have to partner with organisations where they can get temporary staff, contract staff, interim staff, and organisations like Curve will be fantastic to work with on that basis. They're also going to have to work with organisations like BearingPoint, so they're going to have to look at consulting expertise, and then they're going to need to partner. So the emerging fintechs, they're going to have to partner with those, but the critical thing is with all of those, what they need is knowledge transfer. So what they can't have is organisations and people coming into their companies and allowing them to walk out without having transferred the knowledge to them internally to enable their own people to grow. So for example, comparison websites would spring to mind. The ability for a customer to compare your products to another provider of the same products in terms of price, etc. The next thing is the intelligent machine. So machine learning and the autonomy of software and products to operate without the need of human interaction. New approaches to staffing and workforce management. So there is no need to be in the office anymore. Technology has made it possible to work from pretty much anywhere in the world. Technology platforms such as social media are both advantageous to organisations and also disadvantageous. So they can be used to get messages out to your customers, but likewise they're used by your customers to give you bad press when things go wrong. Customers are increasingly sceptical of the data that you hold on them, and we've seen a number of large-scale faux pas where organisations have been hacked and that data has been accessed. So if you look at all of those things, it's not so much the digital challenges for executives, it's the digital world in which we live in that executives are very much part of, and they have to make sure that their strategies afford their organisations to capitalise on all of those things that we currently see. As far as the survey is concerned, there was two other things that surprised me, and that was that 95% of the banks that we surveyed suggested that there would be a first mover advantage by introducing innovative technology to customers. Yet a much lower percentage actually do that. So they are not first movers, they actually claim to be second movers, so they're sitting on the fence with a wait-see strategy. Moving first is not necessarily the best solution. If you look at O2, for example, O2 was one of the first people to launch with a digital wallet. The O2 digital wallet doesn't exist anymore. Competition is now very different from what it would have been previously. So banks competing with banks is no longer the norm. The banks are now competing with the likes of Google, Amazon, Apple, new entrants that are bringing new rules and new ways of working that don't have the aged infrastructure that a bank has and don't have the same distribution costs that a bank has. It's creating immense challenges for the banks. Tougher regulations has multiple impacts on how banks operate, certainly from a cost perspective. There's a cost to comply. There is a cost in putting things right where previous selling misdemeanors that have happened in the banks or manipulation of markets, large fines. We're seeing a requirement for greater capital adequacy, all of which is having a major impact on costs associated with financial services organisations and banks. It's quite difficult for a bank to become a fintech. That's not their capability. So they do need to do something, and partnering could be one option. Funding from a VC perspective, fintechs and startups, and supporting them through their banking and funding needs. But also, I think there is an increasing desire to incubate. So to select, what we're seeing is organisations such as Deutsche Bank, such as the other big UK banks that are selecting premium fintechs to work with, incubate, and bring through to conclusion. Because I think the bank or financial services institution, could just as easily be an insurance company or consumer finance company, need to offer the best of what's out there to their customers. And in order to do that, they need to aggregate. So what I say is they need to incubate to aggregate. The thing is, you can acquire the best software, you can acquire the best system, but unless you upskill the people to be able to work in a new way and deliver that new software, that new system, and unless you win the hearts and minds of those people and the leaders that lead them, you're not going to get any form of sustainable change in terms of introducing or digitizing your bank, your building society, your insurance company, or your financial services organization, or any organization for that matter.